Hello everyone and welcome to today's Morning Report on Wednesday 21st of September with me, Rich Perry, market analyst at Handtech Markets. We've had the BOJ come out with its announcement on monetary policy overnight, and it seems as though the market has given it a sort of rather cautious thumbs up at the moment. The BOJ has embarked upon a change of monetary policy really, just a way, changing the way they look at monetary policy really, sort of focusing more on the bond yield going forward, or the yield curve I should say. Looking to steepen the curve and basically sort of reducing this sort of focus on the belly of the curve and sort of taking out the restrictions it has on buying JGBs. It's going to hold on to its sort of purchases of 80 trillion yen of JGBs a year, but it's also going to get rid of its monetary base target, which basically means that it's going to now sort of focus on overshooting inflation of 2%. So it's going to basically hold monetary policy looser for longer, and that has impacted on the markets. Markets have sort of initially certainly the yen strengthened initially. Let me just show you the yen moves from that BOJ decision. This is dollar yen. Certainly the yen weakened significantly in the first hour or so, but it's now just drifting back. It's now basically flat on the day, which is interesting. Apart from the moves on the yen, the equity markets have been positive on this move. Also, the JGB yield curve has steepened, as I said, markets have generally given this a bit of a positive reaction. Commodity prices, for example, have been supported on the back of this. The gold and silver prices are up. Also, the oil price is fairly positive as well this morning. But generally speaking, the yen has just drifted back in terms of on dollar yen, basically flat on the day now. So really interesting move that we're seeing there. But you have got the Fed this evening. That is another big key risk factor today. Markets are sort of going to be a little bit cautious despite this early sort of positivity through the equity markets. I think forex markets are certainly sort of pretty cautious in front of the Fed in terms of what the Fed might do. A hawkish hold, it seems to be the expectation now, in terms of they're not going to move in September, but they're going to point quite decisively, I think, towards December in terms of when they are going to hike. And this is having a positive, or has had a bit of a positive move on the dollar. Dollar, in terms of the trade-weighted dollar, has pushed higher. Also, the Treasury yields marginally pushing out as well on the 2-year and the 10-year. But generally speaking, the dollar has strengthened on the back of this sort of BOJ decision and the anticipation of the Fed tonight. But I don't think it's going to get too much traction in terms of through today. But if the Fed does do this sort of hawkish hold in inverted commas, I think that would be a positive for the dollar, and that would pull euro dollar lower, and again help to pull dollar yen higher. So these are the two big key risk factors today, and they are still impacting on the markets and anticipation ahead of it. Now, we've also got the EIA oil inventories today. Now, you had the API oil inventories. A surprise drawdown helped to support the oil price overnight. Now, we're expecting an inventory build of 3 million barrels on the crude oil stocks. But as I said, the API was an inventory drawdown, so will that actually be seen? Be interesting. Also, last week we saw the distillates, which the surprise build in the distillates of 4.62 million barrels. That did not help the oil price. That pulled the oil price lower. So the oil price is being driven around by crude stocks, distillates, and also gasoline as well. So these three ones here are the main ones that impact on the oil price. But other than that, you've got the RBNZ tonight, expected to hold rates at 2%, and that's at 10 o'clock. But the Fed's at 7 o'clock this evening with the press conference at 7:30, and it certainly will be an interesting one, I believe. Now, we've got my chart today, which is the sterling Aussie. Now, we had, I was looking at this sterling Aussie chart last week, and it was sort of looking to break out above 77.85. It pretty much hit that to the pip and then fell away, and it's been falling ever since. And the momentum in that decline has now taken it below two key supports near term. The main one being this reaction low that we've got at 72.05. They're about 72 figure pretty much. And that sort of is the neckline of a small top pattern now. That sort of suggests we're going to get probably a move back towards the 67.15 key reaction low from August. The breakdown of this top pattern, the continuation that we've seen today. Look at these momentum indicators. Stochastics falling sharply. The RSI confirming the top breakdown. MACD lines also crossing lower. So these are all indicators that show that the momentum is increasingly negative for sterling against the Aussie. And this is the hourly chart, whereby, should we see if we can get a downtrend? It's a pretty good downtrend, isn't it, on that chart? So that continues, that downtrend continues, and selling into strength remains the case. Now look at the hourly RSI failing around the mid-40s. Mid to late 40s. So any sort of unwinding move that gets into that sort of mid-late 40s area seems to be sold into. The MACD lines failing underneath neutral. It all pretty much points towards further weakness and further downside. We've had a move towards a new sort of new multi-week low this morning, but I think any sort of rally is a chance to sell. That neckline coming in at 172 figure area, I think that would be around about where the selling pressure comes in. Again, that was pretty much, you had a pullback yesterday back towards that old support and a falling over at that level. So that is your initial line of resistance around that 72 figure level. You've got further resistance about 72.50 towards 73 area as well. So nice levels to work with there, but certainly any sort of chance to unwind on sterling Aussie seems to be a chance to sell. So I wish you good luck in your trading on sterling Aussie today, and I will speak to you later. Thank you.